Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce, here to bless y'all with another video here on Blessed to Invest. And today, as y'all see from the title, I'm about to make y'all guaranteed millionaires. We're about to be millionaires today, the guaranteed way. In this strategy here, I know on this channel we talk a lot about trading, active investing, people that day trade, swing trade, position traders that are more active in their investments and understand what they're buying. This strategy is a little bit different. It's a more passive strategy. This is for these people out there that don't want to study the market every day. They don't want to become day traders and waking up every morning and looking at their portfolio. These are people that have professional lives. Maybe they're plumbers, engineers, or whatever they do. They just have regular jobs, they have a business going on, and they just don't have time to sit down and study the market. And also, this is for these people that do have the time to do it, but also just want another source of income. I think it's just for both. I think this is a perfect strategy for people that are just want to be guaranteed millionaires, and they just want to have some money aside just to grow. So when they get to a couple years down the line, they will have enough, a couple $1 million in the bank account ready to go. So the strategy I'm talking about today is investing in index funds and mutual funds. And a lot of people confuse the two. They're unsure what each of them is. So let me break it down exactly what they are. So an index fund, what it does is track a certain sector, certain part of the market. So you have a popular one, it's called the S&P 500 index. And all it does is just track the overall market of the top 500 companies. You have the Dow index. All it does is track the overall market, the overall trend of the Dow. So you can have your gold index, you can have your silver index, you can have your energy index. Whatever index you like that you want to track the movement of it, you can buy an index for it. And what the index market usually does, for example, the S&P 500, it averages about 10%, give or take, a year. That's a pretty reasonable return on your investment. They consider that the average about 10%. So that's pretty good, 10% on your money. And it's really safe. All you do is just put the money in, and then it just tracks the overall market. It moves as the overall market moves, and it moves on average about 10%. With the mutual fund, is slightly different. The mutual fund, guys, instead of having something that just automatically tracks it, it's very quiet, it's very boring, nobody's really touching it, it just does what it has to do and continues on a 10% uptrend, a very simple 10% on average. With the mutual fund people are trying to beat this. So if you can just throw money into the market and you know consistently you're going to get about average 10%, the mutual fund guys, they try to beat this. So you have to be careful when you're buying mutual funds, because you want to make sure they're getting more than 10%. Because if you can just throw your money into an index fund and just get 10% with nobody doing anything, it's best to go there. So if your mutual fund is yielding you 7% a year, you don't want it. You don't want it. It's not good. And the draw with mutual funds, they are managed accounts. These people, they have active managers that are managing your account, and they're supposed to be experts, and they're supposed to get you better returns than the index. But just make sure you do your research on that and make sure you're getting better returns, because you also do have to pay fees with the mutual fund. And about 50% of mutual funds don't outperform the index. So sometimes it's just better to go with the index unless you're in that upper 50% and you can get a better return with paying the management fees better than the index. But let's say you found a great index guy, great manager, he's able to get you 15-20% a year on average. So hey, go with that person. That's perfect. But that's the difference between index funds and mutual funds. The index funds is just a basic fund. It's very boring. You just get your basic 10% a year on average, and it just does its thing. It just tracks the overall market that it has. The mutual fund, you have a manager that's managing it, that is trying to outperform the market. But you just have to be careful, because some of these people don't outperform the market. Just be wary of that. But that's the difference between the two. And to become a millionaire in these things, what you want to do is consistently put money into your mutual fund, your good growth, good manager mutual fund, or your good growth, basic tracking, super simple, the ones I like, because it's just super simple. You put money in, you know you're gonna get your nice little average return, and that's what you do. So all you do every month consistently, you put money in to that fund every month. It's just going to be a payment that comes out. You could talk to companies like Fidelity, Vanguard, stuff like that, and they can set up a mutual or index fund for you and show you the details of how much money you need to put in and how they're going to take it out. They may take it out direct deposit. I know for me, I do direct deposit, so it just automatically comes out every month. But you're probably wondering, okay, so it's very simple. I set one up. I call these different people. I call my broker. They set one up, and they're just taking money out every month. You're probably wondering, okay, so how much money do I need to invest? I'm glad you clicked on this video. Make sure you spam the like button, of course. How much you need to invest varies. So let's break down the numbers real quick for you guys so you can understand exactly how long it's going to take and what you need to invest to get to that $1 million number. So let's say you're going to take an average return of 10%. We're not going to focus on the mutual fund. Maybe the mutual fund, if you got picked correctly and did a track record on the fund manager you pick, you're picking somebody good that's getting you over the 10% average, maybe a 15% return or something like that. But we're just going to take the basic 10% that you can get on average in a basic index fund. We're just going to take these are the numbers based off of 10%. So with 10%, if you start investing $200 every month, it's going to take you 40 years to become a millionaire. So just a simple $200 out of your paycheck every month, repeatedly putting into the market, you're going to become a millionaire in 40 years. And this is pretty good for the people that are just starting their careers and they know, okay, when I become 50, maybe like 50, 55, I know comfortably I just want to retire a millionaire and be good. I don't want to have to worry about this government stimulus and the 401k plan. I don't want to worry about the what is that thing called? The Social Security. I don't have to worry about any of that. I just know I invest my $200 every month, and I know over the next 40 years while I'm working my job, I'm working my career, something I love to do. Again, this is side money. This is passive money. Over the next 40 years, I know I'm going to become a millionaire pretty easy. So $200 is not that bad for 40 years, but hey, maybe it's somebody out there that wants to speed up the process a little bit or has more audacious goals for a passive approach they want to go in. So let's see if we up the numbers, we put a little bit more in how long it would take for you to become a millionaire. If we double that, let's say we double the number to $400 every single month. You want to invest $400 in the market every month. So every month it's coming out of your paycheck. Easy, simple. You put it in, you forget it. Somebody else, just the index is simply tracked. So $400 every month invested is only going to take 33 years to become a millionaire. So it's just passive money, super simple, super easy. You become a millionaire in 33 years. Let's change that. So let's up it a little bit more. So the numbers, as you invest more money, the speed at which you become a millionaire decreases. So you're just doubling your money faster and it's growing a lot faster. So let's see, we're going to look at the $750 and the $1,000 a month, because this is where it starts to get exciting, especially for the people that have children and they want them to like have a good future, a good foundation. Maybe they have a college goal for them. This is where the numbers start looking really pretty if you want to start investing for like kids, or maybe you have your own retirement and you just want to speed up the process. So for $750, if you do this every single month, $750 every month is only going to take you 26 years. So it's a little over 2 decades, which isn't that bad. That's pretty good. 26 years. So let's say you started at 25. By 50, you're going to be a millionaire, which is pretty cool, pretty good. But let's say you take 1,000, it's only going to take you 24 years. So as the numbers increase, you just put more money in, you will become a millionaire a lot faster. And the game plan with this is you just have to be consistent. That's what it's about. A lot of people in this, they just are not consistent. Maybe life changes, and I totally get it. It makes sense. Life changes and you're not able to invest the same amount. But it's about consistency, letting yourself know, okay, this money is set aside for a time in the future where I can use it. And that's what it's mainly about. It's a passive approach. I like it because it's something you can just set it and forget it, and you know it's growing on the side. For the active people that are active in the market, I recommend you do both. Why not have both? If you have an account that you're working, and you have your trading account that has $1 million in it, and then you have a passive account that you're just consistently putting money in for retirement, it's just perfect a win-win. And for those people that are working a job, it's a win-win too. That's why I really like this approach. Just have your nice investment portfolio making 10% in your index. And again, these are low ball numbers. Let's say, for example, 2019, we had a 20-30% return in the market. So again, these are completely low ball numbers. You can probably become a millionaire a lot faster, especially based on how the market has been performing over the past years. Just imagine what it's been doing over the past years. People are becoming millionaires like crazy. But again, I'm not out here to predict the market. We're just taking averages, what it's done over the average. And that's what it does. The market is performing well right now. It's continuing to perform well. And even in those down trends and stuff like that, it's just taking an average. You playing the market over a long period of time. And that's what it's really about. It's just about when you're taking the passive approach, it's about putting your money in a long period of time, because the market does trend upward. And you're just capturing the trend and continuing to grow your money as the trend continues. And that's what it's about, this passive approach. Very cool approach. I like it. I do it myself. I have my own index fund, my own mutual funds that I put money in every month. But let me show you something really cool that I really like, that was very interesting for the people that want to invest something for their kids. Maybe they want their kids to be millionaires by the time they turn 18. So if you want your child, let's say you have a brand new child that's born, and you want them to become a millionaire by the time they turn 18, and then they have some options, ideas, maybe want to go to college, they can start a college fund for them or something like that. To do this, to have your child become a millionaire by 18, you need to invest $2,000 a month for them every single month until their 18th birthday. I know it sounds a little daunting, but I know for a lot of people, they have the money and they can do this, and they are very audacious. They want the best for their kids. So if you want their kids to become a millionaire, that's exactly how you do it. And just saving in general, I think this is like one of those best, simple, easy methods to save money and grow it very quickly over a long period of time. But let me know down in the comments down below, what do you do to save money? What do you use to invest in the market? Are you more passive person that's just laid back, has the mutual funds, the index funds? Are you more active trader that likes to be more like a Warren Buffett and trade the market and make crazy returns and stuff like that? I'm a little bit of both. I like both. And I feel like it's a space for both people in the market, because everybody doesn't want to be or can't be a trader. So definitely recommend this strategy. Let me know down in the comments how it turned out for you. And that's going to wrap it up for the video. It's been your boy, Blessed Applesauce. Stay blessed. And I'm going to see y'all the next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.